I definitely think about those things.
Financial experts say one way to be more confident about your financial future is to be aware of how your money is spent.
Make investment decisions generally. Sit down with your husband, sit down with your investment advisor, 3 people at once, and talk about these things and know where the money is, know where the investments are, know what kind of risk you're taking, and know what your future looks like.
But Mark Teed told 22 News women tend to budget better than men do. And the fact that they're already thinking ahead years down the line means they're better investors than they think. Julie McDonald, 22 News.
Stock market reaches higher and deeper into record territory. Dow Jones Industrial Average and the S&P 500 had their best session in 6 weeks today. The Dow closed 128 points higher to 14,802, a new record high, breaking yesterday's record high. Joining us from downtown Springfield, we have Mark Teed of Raymond James Associates. Thanks, as always, for joining us tonight, Mark.
Hi, Barry.
Yeah, pretty positive day for stocks. What's driving this red-hot market?
Well, I think today's market move was really from the Fed. When the news came out that they were going to keep buying bonds, at least until the unemployment rate went down to 6.5%, that just really stoked the fires today. And furthermore, it was broad-based around the world. Even a market like Greece, which has been in so much trouble, was up 3% today. So it's around the world. It's just a buying stampede globally.
Mark, the 15,000 mark is less than 200 points away. What would hitting that milestone mean?
I think it's more psychological than anything. I'm actually thinking maybe 16,000 pretty soon here. It feels like there's just so much momentum. Barry, there is no fear in this market right now, which is actually scaring me a little bit, but it feels like there's just a stampede of buyers that are just lining up to buy stocks.
You're finding the fact there's no fear scary. All right. Mark Teed of Raymond James Associates, thank you very much for joining us tonight.
Thank you, Barry.
Springfield financial advisor Mark Teed says stock market investors are on a buying stampede. The Dow Jones Industrial Average hit another new all-time record high today of 14,802 points after closing 128 points higher. Teed told 22 News that positive corporate earnings, the Fed buying bonds to support the market, and low interest rates have combined to fuel a powerful rally. He said he doesn't see any big downturn anytime in the near future.
We had a mini correction about a week ago, followed by a buying stampede, but it's really been almost 70 straight days of buying without a real pullback. We should expect a correction, 3 to 4% sometime soon, but it should be shallow and quick, and then the market should go higher at that point.
Teed said the Dow is up 12% in the first 3 months of 2013, which would be a normal one-year performance for the market.
If you are like most people, you're not saving enough for retirement. Now there's a call to push you to contribute more to your personal retirement account.
Budgets are tight for most families, and contributing to a retirement account often gets squeezed out.
As much as I would like to do it, I just guess I can say I'm not in the position to do so.
Even if you are contributing, you may not be saving enough to avoid living your later years in poverty.
People should invest 10% of their income forever and not even change it, never think about it. It just should be 10% and it's not negotiable.
Employers are allowed to automatically enroll their employees in 401k plans with a 3% default contribution. Fidelity Investments president of asset management wants to double that rate to 6%. Employees have to actively opt out if they don't want to participate. The move, Raymond James and Associates Vice President Mark Teed says is too much.
At some point, I think the Fidelity's intentions are to make it so that people won't have to be wards of the state down the road. But I think making it a mandate maybe goes too far.
Workers are also unconvinced, taking into account contributions made to Social Security, a program with an uncertain future.
Because you never know where the next bit of money is going to come from. Jobs are very, very scarce, as we all know it. And I think it is challenging to want to put that 10% aside.
Again, employees can always opt out of that default contribution, but that Fidelity executive said the idea will encourage workers to save more. And the stock
stock market right now is trying to rebound from its worst day of the year. Mark Teed of Raymond James Associates is live in our newsroom to explain what caused this drop. Mark, thank you for joining us.
Hi, Alicia.
Well, yesterday the Dow lost 265 points, one of the worst trading days of the year. Explain why the stock market reacts like this during tragedies.
Well, that's a good question. On a day like yesterday, think of the market as two human emotions. One is fear and one is greed. And when something happens that people can't explain, or they say to themselves, this feels like something that's not going to be good for my portfolio, the easiest thing to do is to sell, go to the sidelines, and wait till you get more information. So I think that's what happened yesterday. Mr. Fear took over from Mr. Greed.
It seems, though, that the market is strong overall because today stocks did gain back some ground. I mean, can the market right now take some hits?
Oh, yes. When the market realized yesterday that there were two bombs, that it was contained, we knew the story, the markets didn't sell off, the VIX indicator, which we all watch, didn't go crazy, then it became the other side of the coin, and greed started to set in and say, maybe this is a buying opportunity. So people started to buy this pullback and start to say, you know, for America's sake, we're going to buy American stocks and we're going to make this thing go higher for the old American spirit.
All right. Thank you, Mark Teed of Raymond James Associates, as always, for joining us.
Thank you, Alicia.
Well, news of the explosions at the Boston Marathon sent stocks tumbling yesterday. The Dow Jones Industrial Average did recover some of those losses in today's trading, gaining 157 points. Mark Teed of Raymond James Associates is standing by live in our newsroom to talk about Wall Street's wild ride. Thanks for joining us today, Mark.
Hi, Barry.
Yesterday, the Dow lost 265 points. That was one of the worst trading days this year. Why does the stock market react the way it does when events that don't seem to be related to the financial markets happen?
Well, the markets hate uncertainty, Barry, and anything that looks short-term, like there's uncertain future or an outcome, it's easier just to go to the sidelines, and that's what happened yesterday. First, the gold drop of 13% in a couple days, but then followed at 245 by the Boston bombing. That was just too much uncertainty for anybody, so the markets just went to the sidelines, and the sell-off was climatic at the end of the day.
Yeah, frightening for a lot of people that are watching their 401ks and retirement accounts. Well, let's talk about that bounce back. The Dow Jones Industrial Average did bounce back somewhat today and gained some of the ground that it lost yesterday, but not all of it. This seems like the market can take some hits. Why is it coming back, and is this was that a one-day event? What changed about today?
Well, that might have been the correction we've all been waiting for. It was 2.x%, whatever it was, and it was enough of a downdraft that a lot of people sensed that there might be a buying opportunity. So years ago, we used to say anytime there's a dip in the market, buy the dips. Well, yesterday and today, we're buy the dips. As soon as they saw the market going down and there was not going to be any follow-through bombs or anything that it looked like it was a one-day event, the market started to step in and say, let's buy.
Well, you're our expert, Mark. What is a correction? Is it 2% of the market correction? Is it 5%, or is 5% way worse?
Well, it's usually 10% is considered a correction, but we're all looking for a 2 to 3 or 4% pullback just to let some of the air out of the tires. It's been 70 days now, Barry, where we've had a buying stampede since November of last year. So everybody's been looking for a little bit of a pause just to let the market refresh itself, and yesterday might have been it.
Well, we're hoping so. And if today's any indication, you mentioned gold dropping. It lost $140 an ounce yesterday. Yeah. That's its biggest one-day decline in more than 30 years. What's going on with gold and even silver for that matter?
Well, I have an answer. I'm not sure everybody's going to like it, but it looked as if the gold market yesterday was trumped by the confidence that everyone has in Ben Bernanke to help solve this financial crisis. Everybody's been buying gold as a hedge against monetary policy and fiat money, etc. We've heard it a million times. But yesterday, it looks as if Ben Bernanke won over the gold market.
All right, Mark Teed from Raymond James Associates, thank you for your insights, and we'll be looking for you later on when the markets do something else amazing.
Thanks, Barry.